Good morning, traders. Welcome to the TMT Daily Strategy video for Wednesday, February 14th. All right, guys, a little bit of a boring day, at least in the morning session, and then we started to break out going into the afternoon, right around 1:30. We'll get that into the charts, but very quiet up until that last breakout. So we have to be very, very patient, especially in this market with increase in volatility. You want to really be selective. It's definitely going to be a stock picker's market, at least for the short term moving forward. Now, I'm really liking the way this rally is shaping up, and I mean rally, I am labeling it a corrective rally for sure. I really like the way it's setting up with very low volume, very sluggish, trying to break through these certain levels, very choppy in the beginning. And you'll see that on the intraday charts going forward. But today and tomorrow are very, very important, which could be a good catalyst for the markets to head lower or to head higher. And that's going to be the CPI report, which is the Consumer Price Index this morning. That's going to be coming out at 8:30 today. So we really want to watch not the number; it's how the markets report and how the markets react to that number. That's really important, right? It's not what the number is, but it's how the market participants react to the number and what they think is going to be either good or bad for the markets going forward. So really important is the CPI this morning at 8:30 Eastern Time here in the United States. And then we have the PPI number coming out tomorrow, which is the Producer Price Index as well. Very important. They're inflationary gauges, so they are going to be really critical. Because why? Well, the Fed is puzzled why they see no inflation. Well, I just think that they're looking in the wrong places, and I also think that inflation could be subdued until it really picks its ugly head up. So that's something that we're really going to be paying attention to. Now, yesterday, real quick, VXX, which is the tracking VIX, right? It's the ETF that tracks the VIX. It was actually up on the day. So we do have increase in volatility, and I had mentioned, and look, everybody does whatever they want to do and make sure it works on your trading plan. But me personally, I'm not looking to short VXX as of yet because we still have pent-up volatility. We have volatility that's been holding steady at this area here at the 50-52 area. So this is something that I'm going to be paying attention to. Would I like a short volatility? Absolutely, because what happens is what? We break out of the band. We break back in the band, and now this is on a sell signal, the VXX, and on a buy signal for the market. But look what happened yesterday. We just kind of held right up in there. We're still on a sell signal. We have to break the low of 47.07 for it to actually pull back lower. Now, that could happen today with a good or a bad number. Again, it all depends on how the market participants react to that number, okay? So let's pay attention to the VXX. You see that we definitely unwound a lot of its overbought reading, but we're still highly elevated. We're definitely above 70 in RSI. And you can see MACD still really pointing to higher prices yet again. And like I mentioned before, you don't want to be screwing around short with VXX if we do get another market sell-off, which I think it's actually in the cards at one point. Take a look at the intraday, and you can see we do have our Fibonacci retracements here. We talked about this yesterday in our research video, and then we caught that 61.8% retrace, and now we're just kind of basing here again. So basing is going to be, if you are going to look to play this short, look for that 47.15, even take out the 47 area, pretty much to 50. So we've been really sideways for 3 days. And really, if you want to play it either way, play the break on either side of this consolidation, this horizontal trend line, the horizontal channel, if you will, and play that to the next area here for that short. That could be a take profit area, or here if you're long, the next area, really the next area would be right around that 60-75 area. Okay, so if you're going to look to do that, but right now it's not giving me anything other than the fact that it's consolidating here. Okay, you could even draw a descending triangle, and descending meaning that we're looking for lower prices. So that could actually be a valid pattern if it were to break lower, knowing that we have a sell signal on the VIX off of the Bollinger Band. So something to think about. So keep that in mind moving forward. Okay, ES. So we have the ES that we bounced off the lows, which we were obviously extremely oversold. And now we just tagged that 38% retracement. Very subdued trading. You could see that we didn't even take out the previous day high of the 2675. So we are looking for anywhere from the 2700 up to the 27.41, and if it gets really that crazy, remember there's a small little gap area up here that can challenge the highs. And remember our map, our possibility of a little map of the markets where we are here, where we stop, whether it be the 50 or the 61.8% retracement, we would come back down, either challenge the lows or make a higher low, and let's just, this is all hypothetical now, and then break out of that swing high, wherever this current retracement rally stops, fill the gap or stop somewhere in here, and then we have a major correction all the way back down again. That is what I'm looking for, because we're on our first stage of that corrective rally. We fail to get everybody, all the shorts in, and then we stop up here at that double bottom, which is going to be very important in the ES, which I'm looking at 25.29 that comes into play here. That'll hold for the next and last push, and then we start our major correction here. That's what I'm looking at. It doesn't have to happen. It could stop here and we could just continue to go straight down. I mean, that could happen. So again, as technical analysts, we need to map the markets and continue to follow and grab ideas and what's going on with this current trend. Okay, same thing pretty much with the NQ. We hit the 38% retracement. We're just underneath. Actually, we did the 50%. I apologize. A little bit stronger index than the ES, but we are looking at the same scenario to play out, whether it stops here or the 61.8% retracement. That's all going to happen with today and tomorrow. And after the dust settles on the inflationary numbers between the CPI and the PPI tomorrow, we'll pretty much get a handle on where we're going from here. All right. So I would start really light today, and let's see what the numbers are. If you're trading pre-market, be very careful, because you got to let the dust settle before you really get into a good swing trading position for the day. Here's the GDX, and you can see here pretty much exactly what we've been talking about. GDX very weak. I really wouldn't want to buy. I really wouldn't want to look to buy gold. All right, and you can see that here. But it is a safe haven trade. So if we do have pent up fear in the markets, where you're going to put your money? Well, you're going to spread it through some bonds and gold and even utilities, even though they have been getting destroyed, might even be a good bounce play. Okay, and you can see that here we did manage to break back up above our RSI 30, and again, MACD still on sell signals. The RSI is not, but it is a short term. I put a 5 and 3 down here just to see where we start to turn back up again. So I like to dollar cost average in around 12.49, 12.50 to the 12.75, but it doesn't have to get there again, like I said. But these are your levels for today's trade. Very big areas of resistance in the gold. Crude oil. We also have the DOE numbers coming out today, so be careful with crude oil if you're long end or short. I'd wait till after the number comes out. We do have the COT report showing that the commitment and trade reports, the producers, which is the smart money report, starting to short again. They're always short, mind you, but remember, it's where the move is really where you want to pay attention to. So if the producers are short up here, and the speculators, which is the dumb money on the report, you don't want to be looking to buy here if the producers are short and they're increasing their shorts. Same thing at the lows. When they start buying down here after a large move, you don't want to be short, and that's what happens. Specs are always down here short, looking to shorts are always at the opposite of move. When the move starts to form, the speculators are good to follow. Okay, just a quick little, and if you don't know what it is, I'm not going to get into it. Just send me an email, support@tradingmarkettechnicals.com, and I'll explain it to you. Excuse me. So that's crude oil. And we have bonds, the TLT, the 20-year ETF. And again, I love the short. And it is going to be repetitive in some of these research videos, because remember, sometimes things they don't move as quickly as we like it to. But I'd like to see that 200 at 124, maybe even 125 to 125.74, anywhere in here. Look for the sell trigger, and then look for lower prices yet again. But I'm not going to short anything that's in a hole like this. Okay. You can see that we're oversold in MACD and RSI, and we're looking for buy signals here. And if the market does get silly again to the downside, you might have a nice retracement rally in TLT, because of that's, again, safe haven trade. Here's the ZB, which is the future, okay, the bond future, and you can see here 38%. We're looking for somewhere up in here, and that would be a great little shorting play up in this area here, 38 to 50%. Now the spiders, as you know, on the left side, we retraced down at 61.8%, and now we're looking at the retracement to the upside. We hit the 38% retracement in the spiders. Again, oversold. Look at the volume. Volume on the upside is decreasing, telling me there's no real strength to the market. Okay, and if you looked at price action all day, you could see the high was not taken out from the previous day, so we had an inside day from the previous day. So I didn't show you any indicators. Nothing really has changed from yesterday's, from the 2-day close. But you can see that we are here, and we haven't even gotten into the 50-day moving out, 50 percentile, which comes in right here at the 269.94. Okay, but this is something that areas that I'm looking for the market to actually pause and even move lower. Now this 50-day moving average in red coincides nicely here with the 50 percentile. So let's keep an eye on this 50% retracement, and even up here at the 273.98. All right, for the next couple of days. Again, whatever's going to happen is going to happen in the PPI and the CPI numbers. Okay, here's the diamonds. Again, diamonds very, very weak as well. Caught the 38% retracement, but we had an inside day from the previous day. Now, if we take out this area here today, you can see the thin zone, right? We're up in this area. You can see it matches perfectly with yesterday's high at 247.38. That was what was really pretty much capping this move. But if we break above it, we can actually get back much higher than where we are from the 61, the 61.8% retracement, and then we'll see where we go from there. But this is a big area here. Okay, you see that thin zone, so let's pay attention to that as we move on for going on to today and tomorrow. Okay, now we have the IWM. IWM has really been lagging. It is our secondary leader of the 5 indices that we follow. The first one would be the transports, but it is definitely the weaker of the bunch. 38% retracement right up in here. Didn't even get to 38% where the other ones did, and even exceeded that going into the 50%. So let's pay attention to the 38%. Let's get some clues and see if we can actually we start even breaking down from here. Bigger picture target's going to be 134.74. I have this out here for about probably about 6-7 months now. That would be the first move lower. Love these volume zones. You can see here that we need to take out the 38%. Matches just perfectly with our volume profiles here, and that's something that I'm really paying attention to, because if that breaks out, you could even take that for a long trade. Off of you can see we'll get you levels off the Pro Trader Premier videos. And then we have the Qs. Okay, now it tagged at 50%, so the Qs, which is our third leader of the 5, all right, now it is showing more relative strength than the other indices combined. But look at volume. It's just dried up. It is gone. So this, to me, is not a very strong rally. Okay, this is something that is absolutely corrective. I am labeling it as a corrective retracement rally. This does not seem to look like that we are taking out highs and we're going to challenge the highs and going further, and that's it. We're starting a new leg, a new market. Not happening. I don't see it happening at the moment. And can it change? It can, and it will, but I don't see that happen at the moment. Here is the transports, last off the daily chart, and again I show you the transports because it is our leader, and you can see here right now what do we have. We just have a nice little bear flag, and we'll get to either the top of the 50-day moving average here in orange at 191.64, or we tag that and then we start to break down. So look for the 50-day on here to 191.54, and then look for the first downside target of 180.08, and then of course that major low really needs to get pay attention to. Otherwise, because we do break down, these will be your bigger areas of support, and that's really what needs to get taken out here. If we take that out, I think you're going to see some much lower prices coming forward in the coming weeks in the equity markets. Alright guys, now let's take a look at our intraday. ES, we did tag we did break above. We are on have an inside day for 2 days. As you know, I showed you off the daily charts, but I want to show you where the levels are. 27.05. We're up about 11 handles right now. So 26.72. We're just underneath this price action of 2,700. So we did get a 2-day move that we're consolidating, and we want to wait for the breakout. Right now in the pre-market we are breaking out. Let's see if it holds after that CPI number comes out today. But these are your levels for today's trade. These are very valid from our algorithms that spits out where price will react to. Same thing with the NQ. 2-day move you can see here. Bigger picture area 64.51, 65.04, 63.36.75. Okay. Then you have the 66.42 and 66.98.50. These are very valid areas for today's trade. Gold, you can see the GC contract, 1332, all the way up to 1342 resistance. We did break that bearish symmetry of lower lows and lower highs. 1325 will be the bigger area of support. Watch the gap area here at 1321 all the way down to the 1315 area. That'll be a bigger area of gap support if we were to roll back down again. But we did alleviate the bearish symmetry of lower lows, lower highs by breaking through this downtrend line, and we closed above it. All right, let's see if this thing can hold now. Crude oil, watch that DOE number coming out at 10:30 Eastern here in the United States. Again, just chugging along here. That DOE number is going to really going to play an important role in where this crude oil is going to be headed. Okay, so pay attention to that. Small little support area: 58.54, 58.96, and then 59.46 up to about $60. IWM, you can see that here again, breaking that bearish symmetry. 2-day sideways consolidation with no real order flow. Now, I like these consolidation areas. Why? Because it's building up energy, and there was no new order flow to really push the market higher. Although we did get a little bit of a bump around 130, and we closed higher. But if you really look at the overall big picture in all of the indices, we went sideways. Now, this morning is a good reaction to the upside. So pay attention to these levels here for today's trade for your price targets. If we gap up into these areas and we fail, you could even take that as a retracement back to the downside. All right, or if we pull back lower, because remember the number comes out at 8:30, anything could happen here. All right, so just pay attention to those numbers this morning. And then last is going to be your Qs, and you can see that here we did break 2 downtrend lines. We are going sideways here. 159.62. That's probably taken out in the pre-market. So your bigger picture area, this local swing high here coming in at 163.08, and then again at 166, back to the 167.56. Have a great day. Watch those numbers. Very, very important. CPI today, tomorrow PPI, and then again Department of Energy, oil, crude oil inventories at 10:30 Eastern today. Have a great day, guys. We'll see you tomorrow.